What's up, butt kissers and feet lickers? We're rolling into week 3 of the government shutdown. Tesla and Netflix are about to report. The Fed's flying blinder than Ray Charles, trying to see if a fat woman is skinny. And Donald Trump just threatened 100% tariffs on China and then immediately said, actually, that isn't even sustainable. Translation, we're in a trade war, but only on the weekends when the markets are closed. The market finished a week that looked like my blood pressure after caffeine. It was up, then it was down, then it was back up, and then it was down. Yet somehow the S&P still closed higher because apparently Wall Street looked at Washington's chaos and said, meh, we've seen worse. So let's start with the big picture. You know, the big kahuna, the overall arching themes. We finally, maybe, and that's a big maybe, get a September CPI report. It was delayed because, you know, half the government's on vacation without pay, and this is the last real data the Fed gets before their meeting next week on whether, at this point, we're going to cut 25 points or 50 points, because there is a 100% chance that we are cutting rates, according to the latest survey. Now, if prices come in cool, Powell can absolutely keep pretending that he's in control of this whole situation. If not, expect another episode of Rate Cuts, The Reckoning, featured on Netflix. Meanwhile, the Fed's in blackout mode. No speeches, no leaks, which for them is a silent retreat for gossip addicts. But that won't stop trades from speculating hard than crypto bros on a caffeine drip. So watch out, because expect some volatility in the markets, especially with a Fed that has no real input or data that they can use to make any informed decisions, other than Indeed and LinkedIn for job openings. Now, across the Pacific, China's tightening export rules, like a woman tightening her purse strings when it's time to actually pay for something. And with China, they're doing this with rare metals. And Trump's calling that an economically hostile act, which, to be fair, is how most waiters describe his tipping. So, kind of pot calling the kettle black here, because guess what? Now we're threatening tariffs. China's stopping soybean imports, and both sides are pretending they're winning. Yet every single economist is coming out and saying that this is not sustainable. But I like to just call it another Tuesday in the market. Now, the big takeaway. We have tariff headlines, which are causing short-term volatility. We have long-term, both economies blink before the bond market does. And metals, semis, and AG stocks will swing more than a Florida voter or that 40-year-old that you saw with an upside-down pineapple that was taped to her door. Now, we have earnings, and it's the week of heavyweights. And no, I'm not talking about the movie for fat kids, but this is a lineup for earnings that looks like a WrestleMania card. Netflix, they're coming in on Tuesday. Tesla, they're coming in on Wednesday. And Intel, they're going to hit the block on Thursday. And Procter & Gamble Friday to clean up this whole mess. It's the Magnificent Seven's turn to prove that they're still magnificent and not just slightly over leveraged, or as they've been popularly known as, the mediocre seven. So first things first, we got Netflix reporting on Tuesday after the bell, fresh off another price hike, because nothing says that we care about our customers more than charging extra to literally watch a show called Squid Games 2, real original. Investors, well, they want to see subscriber growth in this case, and whether ad tier money is real or just a fantasy they stream on loop. Watch active, reoccurring users, ad tier revenue, and most importantly, like with all of our favorite things, guidance. Because if there isn't one thing that will make you go out and have to shoot this thing like it's a horse who just broke its leg, well, it's that guidance. It'll kill you every time. Then on Wednesday, we have St. Elon who's going to descend from X to tell us how many robo-taxis we'll never actually see. Tesla, they have had an absolute monster, legendary Shohei Ohtani type run-up because of AI. Optimus robots, we have self-driving, we have Optimus Prime. Who knows at this point? But now they have to show profit margins aren't being abducted by EV price cuts. Things to watch here would be automotive margins, deliveries, and what does their AI roadmap actually look like? And are we getting any updates on that? If Musk says AI more than 5 times, the stock will rally even if he admits the cars are powered by hamsters at this point, because that's how strong the Tesla cult is. And then Thursday, everybody's favorite, we got Grandpa Tech with Intel reporting. They've been on an AI redemption arc, or should I say bailout arc in this case, with NVIDIA as their sidekick, even though it's not really a sidekick, because when you look at the actual makeup of this, where does NVIDIA benefit? Beats me. And by the way, the US government even bought a stake, which is adorable. Finally, a bailout before bankruptcy. Now, what are some things to watch here? Data center growth, foundry updates, and guidance versus NVIDIA. If Intel pulls off a good quarter, the market might believe in miracles again. And no, I'm not talking about the US hockey team, but we're talking about actual miracles. If not, expect memes of AI inside and profit missing and more circle jerk memes of what the AI industry currently looks like, which is, well, one big circle jerk. We also get Coca-Cola, Procter & Gamble, and HCA Healthcare. Basically, the are we still buying stuff and still getting sick index. If Coke and PG show strength here, the consumer's fine. If not, buckle up for, well, more recession takes than you can find on TikTok. Still, the main character, we're looking at lower yields and a dovish Fed. Tech is going to get more inflated than Elon's ego. And that is going to be our top sector, honestly, because it's the thing that's literally holding up the S&P 500 right now as well. On the defensive side, Lockheed Martin and Northrop Grumman will report this week. And irony alert, the government might be shut down, but guess what? The only part that is still getting checks is the weapons division right now. Nothing says fiscal restraint like make sure the missile bill is paid first. And then for healthcare and staples, HCA and PG keep the lights on. If they beat, it means consumers are coping. If they miss, maybe those Fed cuts could come a little sooner. Besides CPI on Friday, we get existing home sales Thursday and PMI sentiment on Friday. Everything else, jobless claims, retail sales, still delayed. Because again, no one's home at the Bureau of Labor Statistics. If CPI comes in cool, well, guess what? Rate cut hopes jump even higher, maybe to that 50 point, and tech does rip. If CPI comes in hot, well, the yields pop, and there will be a short squeeze on patience. It's basically Schrodinger's economy, both showing and overheating until proven otherwise. Now, here's the vibe for this week. Traders are exhausted, but they're still optimistic, huffing on that hopium. Shutdown drama, we've been there. Tariffs, we've already heard that, and he walks them back every time. And the Fed, well, it's going to be the same speech with a new tie. Liquidity is still strong within the market. Earnings aren't absolutely collapsing yet. And AI is the new religion past Christianity. The only real risk is that optimism itself doesn't become the bubble. But hey, bubbles are always fun until they aren't. Because guess what? You watching this, you're going to be that exit liquidity for the banks. So what to watch here? The 10-year yield near 4.2%. A break lower would give stocks the opportunity to take off. The dollar strength equals pressure on multinationals. And the VIX under 16, well, that's complacency alert. Now, to sum it up, we've got a government that's off, a Fed that's quiet, and a president who negotiates tariffs like he's running a garage sale. China says it's unsustainable. Trump agrees. And yet somehow the market's the only adult left in the room, which is not a good sign. The inmates are running the prison, sir. Now, this week's mood is cautiously euphoric. If earnings beat and CPI cools, well, we rally. If not, well, we'll just blame the shutdown and stream Netflix's money printer, the series. I'm Max Pitts. This is Trades and Gains, reminding you that in America, even when the government stops working, the stock market, it never takes a day off. Make sure you like and subscribe this video. Use the code EricLovesStacks if you want 20% off your first month of Investor Central Club, who this video is beautifully sponsored by. And make sure you tune in because I put out a bunch of earnings reports already and I got more even cooking up today. I hope you all have a great day and I'll see you in the next episode.